trade. Now, the bond sell-off deepens after Jay Powell said the Fed is prepared to hike rates by 0.5 point in May. That's if the move is needed to bring down inflation. Powell took the more aggressive tone in a speech yesterday at the National Association for Business Economics.
The expectation going into this year was that we would basically see inflation peaking in the first quarter, then maybe leveling out, and then see a lot of progress in the second half. That story has already fallen apart to the extent it continues to fall apart. My colleagues and I may well reach the conclusion that we'll need to move more quickly, and if so, we'll do so.
Well, to talk about the markets investing in unusual places, we're now joined by Mathieu Chabran, co-founder of Tikehau Capital. Tikehau Capital is a global alternative asset management group. It's just announced plans to double assets under management to more than 65 billion euros by 2026. And Mathieu Chabran, we're very delighted, can join us in the studio today. So Mathieu, thank you so much for being with us today. We have 1,000,001 questions on inflation, on what it means for your private equity business and where you see money. Has it changed significantly because of these raw material costs, the fight the central banks are having with inflation, on where you want to be invested in?
Well, thank you, Francine. Tom, good morning, and thanks for having us here. A lot of questions, here, because we haven't seen yet all the knock-on effect, of the raw materials, but inflation was something we had, before all this situation, unfortunately, went out of control. And as much as these rate hikes is, in my view, long overdue, now they're effectively fighting and being a little bit caught between a rock and a hard place. So interesting times, for sure, but it's going only one way.
Okay, I mean, Tikehau Capital is quite aggressive in terms of how much it wants to deploy money, where you want to be invested in, the capital that you want to attract. What do you think will be your best investment in the next 5 years?
I don't know if we're aggressive. We're certainly very selective. But there are, few parts of the market that in this environment, and that's why private markets have been benefiting from such, tailwinds over the past 10 years, and I think, can remain. And so today it's about avoiding duration risks, obviously, and it's also trying not to be into over-levered situation. And that's where, private market through direct lending, creating the yield, but yet mitigating the interest rates rise, because we do floating rate. Long-term sell and leaseback real estate, where leases, are indexed. Growth capital, particularly, for all the mega trend, energy transition, cybersecurity, all these, topics that are emerging on the back of this situation, that will be great investment opportunities.
AUM of about 30 billion euros at the moment, the target for 65 billion. That target certainly is aggressive. What would that level or that AUM allow you to do that you can't do now?
Well, it's really, today our job is to be, is to transform global savings, which have been growing on the back of very accommodating monetary policy, and directing the savings into the real economy where it matters, okay? And that's what we're seeing today. So it's not about raising assets for the sake of raising assets, it's that there is a lot of demand from global investors, asset allocators, and on the other side, particularly in some troubled and shaken markets like we have, from corporates, entrepreneurs who need to get this capital to grow. I mentioned energy transition. That's one area that only private market will be able to address in the in the short term.
But now it's public policy. I mean, the EU wants to come in and do renewables. So are you going to be fighting, on some of the projects with the EU?
No, we're not fighting. We're working together, actually. Right. And that's where, private managers, that's where, private allocators have to effectively leverage all those initiatives that are being, launched by states, by EU, and trying to be their partner on that together with private money.
In terms of that energy transition then, in an environment, of course, where you have the conflict continuing in Ukraine, you have these very high energy prices, and then, of course, you've got the central bank tightening. What does that mean for the private equity part of the business specifically, that changed environment?
Yeah. So how do you define private equity? If it's about, the buyout, the big LBOs, companies who've been effectively over the past few years maximizing leverage, that's an area of the market that could effectively concern me. Where I see the opportunity for private equity is effectively, and particularly in Europe, where companies are undercapitalized, is to use this private capital, expansion capital, working with entrepreneurs, families, who need to grow their business, take advantage of consolidation. Sometimes, if effectively they've been suffering from pandemic, they need to reinforce their equity base. That's a great area, to invest, because those people are not leverage junkies.
I know, but if you look at inflation, it's going up. I mean, it's a hard environment to do business. So does it mean that you can scoop in things for cheap, or is it actually just much harder?
I don't think, obviously, some people will try to take advantage of stress situation, distress situation. We're not here to time the market. I mean, we're effectively here to provide long-term, flexible, patient capital to companies who need that, and that sometimes public market can't offer. You saw that, Q1 was very weak in terms of IPO pricing, in terms of, debt issuance, and that's where private markets can take advantage of that.
What is debt origination looking like, that part of the business?
So it's really, the mid-market area. So people in Europe doing 20 to 100 million of EBITDA, right? And they cannot access the public market because right now it's becoming much more selective. And yet they need this long-term, funding and resources. And we can tailor that, in a very bespoke way because that's what our investors are looking for. Long-term, recurring, yielding investments.
Are you seeing any stress there? Any concern about defaults?
So certainly not default yet. The stress is always about working together side by side with your borrower, with your company, to anticipate and to not to be in reaction to some situation. And that's where we tend to be the private market manager side by side and not face to face with your borrower.
All right, Mathieu, is it nice to be in a nice time zone? Because he usually wakes up at like 4:30 in the morning for us. So it's nice, right? You feel refreshed. Yeah, it's nice to have you in London.
Great to be back here.
Mathieu Chabran, co-founder of Tikehau Capital, stays with us, and we'll talk a lot more about some of these rising energy costs, what it means for some of the investments, and of course the read across 5-10 years from now. Now, we're back to talk about some of the economic impact that the war in Ukraine has had on raw materials, inflation, and of course, the longer-term strategy for energy security. We're back with Mathieu Chabran, co-founder of Tikehau Capital. Mathieu, first of all, thank you so much for sticking around. But one of the things that you have been really focused on is on renewables. And you were telling us, this is not only private money, it has to be in partnership with public. But it seems that the timeline, and if the EU says, look, in 2 years, we're no longer dependent on Russian gas, the timeline is a real problem. Like, how fast can we go? And what do you need to really accelerate? Like, we don't really have the technology, and it's certainly not cost effective.
Yeah. Francine, if we step back before this crisis, we already only had 3,000 days to get and to meet, the goal of the Paris Agreement and, for the decarb objectives. This situation, as dramatic as it is, is effectively putting even more pressure to speed up, this transformation. And if there is a silver lining to what's happening, that's probably where it is. Obviously, we're still dependent on some oil, on some gas, and all this trade that we have with Russia. But if collectively that can be a catalyst to effectively accelerating that, because it's not about inventing what we're going to need in 10 years. It's about taking what we have today to invest more, to massify, to scale up, to level up effectively, this alternative source. And that's where I see, some hope, if I may say, that we move from the greenwashing to effectively allocating real money into this transformation.
So where specifically within renewable energies do you want to be focused at this point? Where can you really monetize and get the gains that you need, as well as propelling this transition?
It's first and foremost, Tom, I think, upgrading what exists. So take, for example, building efficiencies. That's 40% of the carbon emission, right? So you take all the buildings, be in London, in Paris, in Frankfurt, in New York, and then you start working on that so that you no longer, throw some energy out of the window, if I may say, but make sure that the way you consume is much more efficient. And so it's about taking, all this, and then you get into, obviously, the solar, the biomass, some alternative source, but start with things that exist and just need to be upgraded.
I mean, we had this huge debate in the newsroom yesterday about energy storage and the fact that actually we talk about it as it's done, but there's so many components that still really need to be ironed out. I mean, the other question is we're consuming coal more than we have in the last 5 years. So does it worry that we actually can, may move away from our goals as we need to transition fast away from Russia?
No, I don't think, speaking about, energy storage, I'll give you an example. We invested in Italy in a great company doing some electrical batteries, some rotor and stators that, for the past, 40 years were only used for mechanical, effective batteries. They pivoted and transformed all their production line. And now it's not just about, the Teslas of the world. It's about the traditional automotive constructor,
and that's
moving
scalable.
them. Absolutely. And that's a very point, Francine. It's about scaling, massifying some existing product that then can effectively take over, from more traditional.
We've stopped talking about the pandemic. It's still there. COVID-19 is still there. Infection rates in the UK are ticking up, in fact. I want to talk about the real estate, how that overlaps with the real estate investments and how that has changed. Do you still want to be investing in hotels, in office space? What are you looking at when it comes to real estate?
Yeah. So yes, we're still very much, invested. At Tikehau, we're managing, 10 billion of real estate across commercial real estate, part of the retail, but also residential. More and more. We just completed a very big transaction in Portugal, for example, on the residential space. So there are two angles here. It's transforming real estate, part of that, and we did, a couple of transactions in London. One in the outskirts of London, which was more like an industrial site, to transform and upgrade. The other one is on Pall Mall. Very prime, but that's when, some investors are walking away, because of the Brexit, let's say, and effectively stressed a little bit by the pandemic. And that's where at Tikehau we like to be a little bit contrarian. It's a supply demand, and, I feel very good transforming a building on Pall Mall.
What about SPACs? I think it was like the buzzword 2 years ago, a bit like the Kardashians, and then they've kind of run out of fashion. The millennials will hit back saying, no, the Kardashians are still in. What's happening to SPACs?
I know you like, talking about SPACs, and who we partnered with, with Jean-Pierre Mustier, Diego Di Giorgi, Financière Agache. We raised 3 SPACs last year. 2 in Amsterdam, 1 in Singapore. We were, one of the first batch in Singapore to do that. Here again, create, not compete. The US market, and I'm based over there, as you know, was, it was crazy. Way too many money being raised. In Europe, less so. And at this time where the market is effectively softening for the IPO market to get access to long-term capital, over the past, couple of months, we've seen an increased number of discussion, again, with entrepreneurs. A SPAC is not buying a company, it's giving access to a private company to the public market. So yes, we're still very much there. I'll tell my partners that you call us a Kardashian. I'm sure they'll enjoy that.
They're going to love it.
Yeah, they're going to love that.
Yeah, I'm getting a lot of flack from the newsroom saying the Kardashians are still in.
Yeah, they are not walking back from this. It's all about the Kardashians. We're just moving on from the celebrities for the moment and the SPACs. Just last question, I think we're running out of time.
Yeah.
Your regional preference, as you have this expansion plan, you want to double your assets under management.
Yeah.
Which countries for you offer the most opportunity? Where are you going to be focusing your attention regionally?
Yeah, Tom, I mean, we're first and foremost, a European player, and we expanded in Asia 5 years ago. I'm now based in the US, for the past 4 years. These 2 markets have been big, in giants, to our overall growth. We're expecting that to grow. We are announcing this morning we're opening our first office in Israel, in Tel Aviv. That would take, 13 offices worldwide. And for us, it's effectively about, being local. I mean, here in Europe, big question mark, obviously, because we're probably at the core of this whole situation. Yeah. The US have been booming, as you know, maybe a bit overheated, and this inflation, will be something to address over there. And then in Asia, always, a complicated zone to address if you're not local. That's why, we were down there in Singapore, in Korea, in Japan, and we see all this zone extremely interesting.
We need to get you back to talk about China and also to talk about some of the other things that actually we should, including Latin America. Mathieu Chabran, thank you so much for joining us, co-founder there of Tikehau Capital.